everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US Market Update. No hat today, in honor of all those wonderful moms out there on Mother's Day. Let's look at the charts. And if you're new around here, don't forget to subscribe and give us a like. You'll get the latest US market updates as soon as we post them. At the time of this recording, it is 7:15 Eastern Time on Sunday evening. And at this moment, the futures are down 3.5 points, so pretty darn flat. Not giving us much of an indication where things are going to open on Monday, but long time between now and when the market opens. On Friday, we move back to the upside, and as a reminder, closing right back at that 61.8% fib corrective level. We hit it back on 4/29, closing right on top of it. We've come back down and tested that level on the 4th of May, and then right back to close here. So real classic Elliott Wave Fibonacci price action thus far, and you know the drill from here. The question becomes, are we going to go up and fill this gap? Are we going to tap that 200-day moving average before we start this downward move in the C wave of a downward zigzag? Or do we go up, violate this downward zigzag pattern, and trade back to the new highs? We're going to find out those answers, I think, this coming week. We're getting awfully close. We've been talking about it for quite a while. Before we move further into some other charts, there's some I wanted to share with you that I watch a lot of people do. It's called the Fed Fund Futures. The Federal Reserve claims that they don't follow along with what the Fed Fund Futures contract says, but it is uncanny how predictive the Fed Fund Futures contract is on where future rates are going to go with the Federal Reserve. And what I wanted to do is scroll down, and the most important thing to look is in the high column. So look at the high price, and as we go down, we see the November contract, we traded above 100, and then in the December contract, we traded at 100.025, actually closing above 100. If we click on this little graph thing, it will actually bring up a graph. And there's the graphic representation of what's happening during the Fed Fund Futures. And there's, you can see where we traded above that 100 level. What does that mean? Well, if it trades above 100, that's an indication of negative rates. Remember, prices and rates move inversely. So what the Fed Fund Futures is predicting is that by the end of this year, we're going to have negative interest rates, something the Federal Reserve said they would never do. But we all know that they've already done things they said they would never do. So if you go back and look at the market, I think you would agree that going to negative rates, probably not a good indication of positive economic strength moving towards the end of the year. Now, the question would be, how does the market take that? Does the market like the fact that we go to negative rates? It certainly has liked the fact that when they went to zero. It's going to be fascinating to watch over the coming months. I wanted to go back and show you a chart of the VIX as we broke out of that consolidation area that we were talking about there around 30. So we closed down at 27.98, and we are not far at all from coming down and filling that gap that's at this point pretty likely. Also wanted to update you again. We talked about gold and silver in the last recording. Well, gold moved to the downside on Friday out of that triangle. And again, this is the triangle that I like to look at, the descending form. And we had looked to break out, and we mentioned in the last recording that you have to have a follow through or confirmation day. We didn't get that on Friday, but look at silver. Silver did move to the upside. And again, I was talking about how you're getting a better percentage return out of SLV than GLD, even though not everybody likes to hear that or agrees with it. But the GLD moved down 0.6% on Friday, and SLV moved up 1.25. So there was confirmation on the breakout in silver. Also wanted to show you the dollar because that moved out, and boy, we are absolutely dead smack in the middle of this triangle. And no, I don't know which way it's going to break. That's what triangles mean. Triangles are consolidation patterns that tell you you're about to have a significant move, one direction or the other, but no forecast as far as which direction. And I wanted to leave you, we haven't looked at oil recently, but I wanted to share this chart with you. Looks like the wave 5 is finished to the downside, and we're retracing back up. When a wave 5 pattern finishes, the likely move is to go back and retrace that previous 4. So back up to this level is where it looks like we're heading in oil, which you would think that that's fairly bullish for economic strength with so many companies being tied to various type of oil products. So that catches you up to date. I recorded a little bit early this evening. My mom is in town, and I hope you've had an opportunity to spend some time with your mom as well. Take care, everybody. Talk to you soon. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.